Welcome to the deep dive. Today we're really digging into Shilchar Technologies Limited. They're a pretty significant name in the transformer game.
Absolutely. And we've got some great material to work with. Their latest earnings call from, April 22nd, 2025?
That's the one, plus context from calls back in October and February 24. So quite a timeline.
Right. Gives us a solid view. So the mission today.
Yeah, let's pull out the key stuff, the real aha moments about Shilchar, the transformer market itself. Basically, what's really going on.
And make it clear, make it understandable for you listening without getting lost.
Exactly. So, okay, first things first. Their recent performance, the word exceptional kept popping up in that April call.
And it seems justified. Q4 for FY25 and the full year. Both sounded very, very strong across the board.
What really jumped out at me was the capacity utilization. They hit full capacity way sooner than expected.
Yeah, that was a big one. Full utilization in Q4 FY25. They were originally targeting, sometime in FY26 for that?
Right. So getting there early, that says a lot. Strong demand, good execution, maybe both.
Probably both. It's definitely a positive surprise. Signals things are clicking.
And you see it in the numbers, right? Highest ever revenue, highest ever profit, quarterly and annually.
Mm-hmm. Tangible results.
Plus, for anyone interested in the financial side, they've proposed a final dividend Rs 12.5 per share.
And there's that bonus issue too, right? 1 new share for every 2 held.
Exactly. Which, interestingly, ties into something else.
Ah, the potential NSE listing. They've mentioned that before.
Yeah, in the October and April calls. This bonus issue helps them meet the capital requirements, apparently. Sort of clears the path.
Makes sense. Could mean more visibility, wider investor base down the line.
Okay, so zooming out from Shilchar itself, the whole industry seems to be riding a wave.
Definitely. You've got rising electricity demand in India, projected peak of 273 gigawatts this June. That's massive.
It really is. And all that power needs transformers to manage it.
Right. So big investments happening in generation renewables, conventional, but also, crucially, in transmission and distribution. T&D needs a lot of transformers.
And the government's push for green energy, that 500 GW target for 2030.
That's a huge long-term driver, especially for solar and wind, which seems to be Shilchar's sweet spot.
They did mention that, didn't they? Even back in Feb 24, renewables were where a lot of the inquiries were coming from.
Yeah, solar wind projects seems like a core focus. Smart positioning, given the trends.
Which brings us neatly to their expansion plans. They finished one expansion back in August 2024.
That took them up to 7,500 MVA capacity. Megavolt amperes, basically how much power the transformers can handle.
And it sounds like the market just soaked that up immediately.
It does. Reaching full utilization that quickly after the expansion, it just underlines how strong that demand really is.
And they're not stopping there. Planning the next expansion already.
Looking at the scale, costs, land, the usual planning stuff. They said they'll announce it when it's finalized.
Keeps things interesting. Builds a bit of anticipation.
And importantly, they seem to have the space for it. They mentioned having, 17 acres?
Yeah, and only using about 40% of it currently. Plus, the utilities are apparently already in place.
So infrastructure-wise, they're sort of ready to go when they finalize the plans. That's a good position to be in.
Okay, let's switch gears a bit. Tariffs. Specifically, U.S. tariffs. Always a hot topic in global trade.
Right. And the update from the April call was reassuring, actually.
Yeah. What was the news?
Basically, as things stand right now, there are NO reciprocal tariffs on transformers going from India to the U.S.
Ah, okay, so no immediate hit to their U.S. exports then.
Correct. No immediate impact. They are watching it closely, though, especially after this 90-day tariff pause ends. Things could change.
Sure. But even if they did, how exposed are they?
Well, that's the other key point. North America is actually less than 20% of their total sales.
Oh, okay. So the majority comes from elsewhere. Other exports, India itself.
Exactly. Mostly other countries and the domestic market. So that provides a decent buffer,
And didn't they say domestic growth might be even stronger next year?
They did. They anticipate higher growth domestically, which could mean the share of revenue from India actually increases, further reducing that reliance on any single export market.
Got it. Okay, so what about demand right now? Their order book.
Sounds incredibly strong. They use the phrase flooded with inquiries.
Huh. Okay, that's pretty clear then. Both domestic and export.
Both, apparently. And the actual order book. As of late April, it was close to 400 crores. Rupees, that is.
400 crores. That's a healthy pipeline.
Definitely gives them visibility. And looking ahead to FY26, they're targeting sales of around 750 crores.
Which is, what, 20-25% growth?
Roughly, yeah. Ambitious, but seems plausible given the demand they're seeing.
They also mentioned something about seasonality, didn't they?
Right. Important context. Q1 is usually slower for the transformer industry. Q4 is the strongest, so
Yeah.
you got to read the quarterly numbers with that in mind.
Good point. Okay, let's drill down into their products a bit more. What exactly are they selling and where?
So in India, their main thing is step-up transformers for renewables. Solar IDTs, those are interconnecting transformers and wind transformers.
The big ones you see at solar farms or wind installations.
Exactly. And some power transformers for electrical substations too, but interestingly, not distribution transformers.
The smaller ones on utility poles, you mean?
Right, they don't play in that local market. But for exports, it's different.
How so?
For exports, North America, Middle East, North Africa, mainly they sell the whole mix. IDTs, distribution transformers, the lot.
Okay, so a broader range internationally, and renewables are a big slice overall.
Huge. Back in February 24, they said it was around 60% of their total business. Really shows that strategic focus.
Makes sense. Now, competition. With this much demand, others must be jumping in or expanding too.
Oh, for sure. That came up in the call. Lots of competitors are also adding capacity. It's the natural response.
So is that a worry for Shilchar?
Well, their view seemed to be that they got a head start with their first expansion. They think a lot of the new industry capacity will come online over the next, say, 2-3 years.
So they have a bit of a timing advantage, perhaps.
Perhaps. And they also believe the overall demand, driven by government power initiatives, will remain very strong anyway, enough to absorb new capacity, maybe.
Who are they actually up against, especially in that renewables space?
Mostly smaller Indian companies, apparently. Turnover maybe 150 crores range.
And it's hard for new players to just enter.
Seems like it. High barriers. Transformers are critical kit. You need approvals, a track record. It's not an easy market to just jump into.
What about pricing then? Is it cutthroat?
It's competitive, definitely. But Shilchar feels they can get a small premium, maybe 1-3% because of their quality and service.
That little bit extra for reliability.
Exactly. Customers seem willing to pay for that peace of mind. It adds up.
Okay, let's talk financials. How's their overall health?
Very strong, actually. Key highlight. They are completely debt-free.
Wow, okay. Debt-free, and they have surplus funds on hand.
Yeah, in today's world, that's a massive advantage. Gives them flexibility, protection against interest rate hikes.
Right. Now, I saw something about high trade receivables. Doesn't that usually mean customers aren't paying quickly?
Normally, yes, but here it's a bit different. They explain that most of it, like 70-75%, is backed by letters of credit, LCs.
Okay.
And these LCs have like 180-day payment terms. But here's the interesting bit. Because Shilchar has strong cash flow anyway, they actually earn interest on those receivables while they wait.
Get out. Seriously. They make money waiting to be paid.
Basically, yeah. They've turned a potential drag into like an income stream. Pretty smart financial management.
That is smart. And profitability. Margins.
Consistently healthy, EBITDA margins are regularly north of 25%.
That's pretty solid.
And they even hit 31% in Q4 FY25. It comes down to, efficiency, low overheads, no debt servicing costs.
And the export business helps there too, right? Higher margins on exports.
Significantly higher, yeah. They mentioned figures like 30-50% margin on exports versus maybe 15-20% domestically back in Feb 24.
Wow, okay. Big difference. So just wrapping up with some broader strategy points, that NSE listing is still on the table.
Seems like it.
Yeah.
A recurring theme in the calls. Probably waiting for that bonus share process to wrap up.
And their growth plans.
Yeah.
They're funding it themselves.
Yeah. Looks like organic growth funded by internal accruals. No big acquisitions mentioned. They seem confident in their core business generating the cash needed.
They also decided against making their own raw materials, right? The CRGO steel.
Correct. No plans for backward integration there. They said local suppliers are readily available, so why bother?
Makes sense. Focus on what you do best. And no plans for EV charging station transformers either.
Nope. Apparently, those are smaller, more standard items, kind of outside their main focus area.
Okay. One last thing. Forex. Currency risk with all those exports.
Right. You'd think they'd hedge, but they don't.
Why not?
Their rationale is they have more foreign currency coming in than going out, net inflows. And historically, they've actually gained from currency movements. So they just let it ride.
A bit unconventional maybe, but sounds like it's worked for them.
Seems so, given their specific situation.
Okay, so let's try and pull this all together. What's the big picture here?
Well, Shilchar's clearly had an exceptional run lately. Performance is strong, driven by efficiency and really robust demand, especially from renewables.
And they're positioning for more growth with capacity expansion, navigating trade stuff pretty well.
And doing it all from a position of real financial strength. Debt-free, good margins. The outlook seems, quite positive.
And for you, listening in, what's the takeaway?
I think it gives you a really valuable window into a crucial industry. Transformers are vital for the energy transition. Understanding Shilchar's story, their choices, their results tells you a lot about the opportunities, the challenges in this whole power sector.
Definitely. So here's a final thought to leave you with. We see this strong growth, this shift to renewables, rising power demand. How does a company like Shilchar keep growing ambitiously while maintaining that edge, those high standards?
Right. Especially as the market evolves and more competition potentially enters. What else beyond just building more capacity or dodging tariffs is going to shape their path over, say, the next 3 to 5 years?
Something to think about. Thanks for joining us on this deep dive.